So, hello everyone, and welcome to the first episode of our series dedicated to helping you master your cash flow. I'm thrilled to be joined today by Philip King, former Small Business Commissioner and tight cash flow expert. Hi, Philip, how are you?
Good morning. I'm very well, thank you. I'm delighted to be here this morning.
Fantastic. Thank you for being here. I'll let Philip introduce himself in a minute and he'll tell you more. But before we start, just a quick tour of Zoom. So depending on how you're watching us, you have a toolbar at the top or at the bottom of your screen. We will be doing a Q&A, as I was saying. So make sure you open the chat box and the Q&A box so that we can access those easily at the end. I can see there is already a question in the comment box. Hello, is this session being recorded? Absolutely. We will record this session and share it on our YouTube channel and on our blog. So you will have access to all of this. Also, if you have any comments, please use the comment room and the Q&A room for later when we take on the questions. So yeah, okay, great. I can see a good number of you are watching us live. So thank you again so much for being with us today. And if you are watching this after the live event, well, great to have you along too. My name is Valentine Hutchings, and I'm part of the team here at Tide. And for those of you who are new to Tide and what we do, just wanted to give you a quick overview before we start. So we are the fastest growing online business current account provider in the UK, and we're used by over 350,000 businesses. Our aim is to provide our members with a service that saves them both time and money when it comes to their business banking so that they can actually focus on growing their business. So the sign-up process is quick and easy, and the app itself is easy to set up and use. And we also have a huge amount of in-app products that will help you make your banking life a lot easier. And that includes our auto-categorization tool that categorizes all your transactions for you. We also have an invoice feature that allows you to create, customize, and send professional invoices from the app. So we also have our invoice assistant add-on tool that is very helpful. We also have many other features that saves both time and money when it comes to dealing with your business banking. That includes our cash flow insight tool, which is particularly relevant today, but I'll mention this in a few minutes. So yes, without further ado, I'm going to let Philip introduce himself.
Thank you, Val, and good morning to everybody listening and watching this webinar, either live or after the event through YouTube or the blogs. My name is Philip King. I was, until the end of June, the interim Small Business Commissioner, having stepped into that role at the request of government, initially for 6 months, which became 18 through COVID, while they were recruiting a permanent commissioner. Prior to that, I spent 14 years running the Chartered Institute of Credit Management, a professional body for people working in credit management who are acutely aware of cash flow. It's their reason for being. And prior to that, 26 years working in various organisations in frontline credit management, where I was responsible for ensuring businesses' cash flow was maintained and sustained. So somewhat embarrassingly, that means I've got about 42 years in total experience of dealing with cash flow. Most recently, the 18 months as the Small Business Commissioner meant that I spent a lot of time with small businesses and saw them suffering through the pandemic and so on. I'm passionate about making sure SMEs can be sustained, can survive, and can flourish. And I'm delighted to be having this first webinar, setting out a series of questions, which I think are really important for businesses that are going to supply businesses on credit.
Fantastic. Thank you so much, Philip. And, we've both introduced ourselves and we'd love to know more about you watching us live. So I'm just going to send a few polls during the session, and we'd love to for you to just take a minute to reply. So the first one I've just sent is just to check when you started your business and, how old your business is. I'm seeing a few answers already. Thank you for answering already. Great. So it seems that we have a majority of people watching us live that have both either in their first year of business, they're created, or 2 to 5 years. Okay, very interesting. Right, I'll give you maybe 2 more seconds for people that haven't replied yet to the poll. Great. Okay, I'll end the poll. So final number, we have 29% of people watching us live that started their businesses this year. 24% have launched it last year. And we have got 35% that launched a business in the 2 to 5 years. And we also have 6% that have started a business 5 or 10 years ago. And we have also 6% that have started their businesses over 10 years ago. Wow, amazing. Well, welcome everyone. Thank you for sharing this. Well done to all of you. And thank you so much. It's great to have an understanding like this, because no matter how old the business is, no matter what size the business is, right, the financial forecasting is important, especially for small businesses where cash flow is so crucial. There is also something critical about the period we are in right now, right? We are getting out of the pandemic, everything is reopening, which is the reason why as well we really wanted to create this series and launch this series about managing cash flow now. Philip, can you tell us more about how this whole period is impacting small businesses?
Well, thanks, Val. Well, I think small businesses always have challenges. Many small business owners are following a passion, and their passion is what they do and what they enjoy doing, not necessarily administering their business. That's why I think Tide has been so instrumental in providing tools that enable businesses to manage the accounts easily. But I think the last 18 months have been particularly challenging. For many businesses, they've had almost no turnover. So they've had to go through a period when their sales have dropped massively, completely unexpectedly and out of the blue. They have been in a position where they've had to lay staff off or put staff on furlough and so on. They have lost customers because some customers have stopped trading or have gone bust as a result of the pandemic. In some cases, their suppliers have gone out of business, so they can't get supplies from places they used to get them. A lot of businesses have taken on new debt, so they've taken on a bounce back loan, which is now becoming payable, and that's something that wasn't forecast originally, wasn't in the balance sheet this time last year or the year before, and so it's a challenge. And then there's some things that are sitting outside of COVID. The massive increase in shipping costs, for example, is hitting small businesses really hard. Difficulty in getting supply from the Far East is causing problems. The increase in documentation requirements post-Brexit are causing businesses problems. And I think back to COVID, that the availability of finance is reduced because a lot of the finance providers were almost put into second position because of the government-backed loans, and therefore they're in a different place now. And I think trade credit is going to be scarcer for businesses who need to buy things on credit. A large business that's supplying thousands of small customers has got to look at its own risk profile and work out whether or not it can maintain the credit lines it was previously given. And that therefore means that small businesses are going to be challenged from a whole host of different directions. And I guess that just makes cash flow even more important than ever.
Yeah, absolutely. And something we did as well to understand a bit the current climate within our followers on social media this week is ask a few questions about how our followers feel, small business owners feel about their cash flow and the coming year. I'm going to send a poll to you right now, watching us live, about cash flow. So the question is, I'm just launching this now. You should see it on your screen now. The question is, have you feared closing down your business because of cash flow problems? We would love to know that. And in the meantime, I'll read the few findings we had from those polls on social media. So on Instagram, of the people who replied, 56% said they don't know how to manage the cash flow, but 85% think poor managed cash flow is a risk for the business. And on Twitter, 36.4 people who responded said they could not recognize the early signs of cash flow problems. Here during the session, let's see. Okay, thank you so much, everyone, for answering it. I'll end the poll now. We have 44% saying that they have fear closing down their business because of cash flow problem. So this leads us to our first question, Philip, which is really, why is cash flow a sink or swim issue?
Well, there's a saying that turnover is vanity, profit is sanity, but cash is reality. And that's a really profound statement, and so true. There are lots of businesses that have, healthy turnover, but if you haven't got cash flowing through the business, then you can be in real trouble. And you don't need to look very far to see examples of that. Those that are as old as I am will remember Woolworths going bust several years ago, Comet, more recently Debenhams, the Arcadia Group. Those businesses went bust because they ran out of cash. There are lots more complex descriptors, but the reality is that if you can't pay the rent, or you can't pay your wages, or you can't pay a key supplier, then you're in trouble. And in the retail sector, the Woolworths, Debenhams, Arcadia examples, because those businesses had no cash, they couldn't get credit insurance, therefore suppliers wouldn't supply them on credit, and they needed cash to pay up front for stuff, and they ran out of money very quickly. And that's no less true for a tiny coffee shop or a plumber or any other small business than it is for Debenhams, Woolworths and Arcadia. Businesses rely on cash. And in just the same way as if I haven't got enough money to pay my rent or to pay my mortgage, I've got a problem. A business is in the same place. And it's really important that businesses recognize that. And in reality, businesses fail when they run out of cash. And one of the sad facts that I've seen over the last, particularly 18 months as Small Business Commissioner, is that very often small businesses only think of cash when it runs out.
Right.
And that's a real problem.
Right. So time is absolutely of paramount importance. What's the main thing? Because obviously, I completely understand when you were saying how, we tend to think about it when it's too late. So what are the tips to make sure this doesn't happen?
Well, I think for me, the key phrase is manage cash flow.
Right.
And I think that means, planning for it. So, it doesn't need to be a sophisticated tool, but somewhere just write down what's coming in when, what's going out when, and make sure there isn't a gap anywhere where actually more is going out than is coming in. And if there is, then think about it and plan for it. If you go to the bank and ask for a loan today and say you need the money tomorrow morning, it's almost certain that the answer will be no. If you go to a bank and say, in 6 weeks' time, I've got a week when I'm going to be a bit short of cash, I need an overdraft for a week to get me through a particular issue, the chances of getting a positive answer are much heavier. And if the bank says no, there are other routes of finance you can go to get finance, but you can't do that at a moment's notice. So looking ahead and knowing what's coming in and what's going out is really important. And just thinking about how money is coming in and whether it's coming in on time. We'll get onto the issue of late payment shortly. But a really simple tip is to look at your cash balance every day. I ran a small business as a chief executive of the Chartered Institute of Credit Management. That was a small business. And one of the things I did was my finance director sent me an email at the end of every day saying how much was in the bank. And whilst that's not a particularly scientific number, it does give you a feel, and you get to know when to expect it to be higher in the month and lower, and you can just get a feel for where the business is. Just looking at your bank balance every day is a really good discipline, just to think, oh yeah, it's where it needs to be, and being prepared when it's not. And I think the other thing I would say is that be prepared to listen to advice. There are lots of people out there giving advice. There's lots of business organizations, there's the likes of Tide. If people are giving you advice, listen to it and heed it. Use tools that are available. There's some great software which is quite readily available. Val, you've already mentioned the Tide tools that are available. I know the Cash Flow Insight tool is live, and you'll talk about that later on. But use tools that are available to make it easier for you, and find a way of managing it that works for you. For some people, it's tasks. Some people, it's a note in the diary. So for some people, it's an alarm that just reminds them to look at something. But whatever it is that works for you, then use it. Because if you don't, then you lose sight of it. And without looking at it, you've no idea what's happening.
Yeah, absolutely. So keep your eyes on it. Know the number, and I think this brings this highlights an issue, which is obviously small business owners do not start their businesses to do admin. So maybe there is a fear of doing it wrong, and there is a bit of procrastination and push back around those. But keeping your eyes on it is the first step to make sure you have a healthy cash flow, as you said. Could you also tell us, Philip, why is badly managed cash flow a risk for those businesses?
Well, simply because if it runs out, the business fails. But I think because you need to manage cash flow in the same way as you need to manage your home finances, so you can buy groceries and pay the rent or the mortgage and all the other things that come our way. A business is no different. And in the same way, if you run out of money on the 24th of the month, you've got a week to fill before that you get money in. For a small business owner, often the home finance and the business finance is inextricably linked, particularly if you're a micro business, and therefore managing it is really important. And one of the things that I've often said is that what for a large business is a few rows on a spreadsheet, for a small business owner is the difference between putting cornflakes on the table or not. And therefore it's absolutely vital that they keep an eye on it. And we'll come on to late payment, but I think just in terms of managing cash flow, just being aware of what you expect to be there and making sure you know if it's not, and reacting to it. And we'll come up to that in later sessions when we talk about some of the other questions I think should be asked. But keeping an eye on it and making sure react when what should be there isn't is really important.
Right, absolutely, and once again, it's keeping that in check, and with what you mentioned, what works for you, right? There's tons of solutions out there. It really is, personal preferences on how to manage it, but the main takeaway is keep your eyes on it, know your number. And in terms of late payments, because you touched based on that, but can you tell us more? The effects it has on a business and essentially how to avoid this.
Okay, so late payment is, I see we've got a question in the Q&A, which I'm sure we'll come back to shortly about late payment. But late payment is a real killer for small businesses. If you agree someone's going to pay you on 30 days and they don't pay you until 45, you've got a fortnight's gap in your cash flow, which you've got to try and fill somehow. And it's important to remember that the issue of late payment doesn't just affect you financially. Over the last 18 months as Small Business Commissioner, I talked to hundreds of small business owners, many of whom suffer from mental health, sleeping disorders, eating disorders, relationship breakdowns, all sorts of issues that arise from late payment. And if you're laying there awake at night, worrying about whether a payment's going to arrive tomorrow, that's not a good place to be. And it becomes all consuming and it distracts you from what you should be doing. If you're a plumber or a hairdresser or a web designer or whatever it is you do, you want to be focusing on what you do best, not focusing on something else.
Right.
And the non-receipt of money can be really, distracting and can become all consuming in your life. And I think the other thing that businesses have to bear in mind is that late payment is bad enough, non-payment is worse. And often late payment can lead to non-payment. And I think often people forget the peripheral impacts of non-payment. If you lose an invoice for £2,000 doesn't get paid, you haven't lost £2,000. You've lost a lot more than that. You've lost the time that you spent creating those goods or buying things for them or working, whatever. You could have sold that stuff somewhere else, so you've lost the income from that. You spent a load of time trying to chase money that you couldn't get and so on. But worse than that, if your margin is 5% and you lose £2,000, you've got to sell £40,000 worth of goods to make that 5% back up, because it's off the bottom line. So the impact of late payment is huge, and particularly non-payment. And I think it's really important, and I know we're going to come on to this in later sessions, but it's really important that payment becomes a key part of the conversation with any customer from the very beginning. It shouldn't be an afterthought. It should be right up front. You know, I want goods delivered next Wednesday. Yeah, that's fine. I can deliver them next Wednesday, but when are you going to pay me? Because unless you know that, unless you agree that, then you're potentially in real trouble. And businesses sometimes have to make a choice. You know, if they're going to supply a customer that isn't going to pay them for 4 months, you know, is that business worth taking? Or should they be trying to look somewhere else to get business? So I think there's, as I say, I keep saying we'll come back to this stuff in later conversations, but it's really important that the impact of late payment is recognised, and that businesses do everything they can to avoid getting into a position where they are waiting.
Yeah, no, absolutely. I think this is so important to remind everyone, and also just something that you touched based on, Philip. This is, you know, the episode 1 of a series. So this is the first episode, the why is cash flow so crucial for small businesses. So, you know, we'll cover more around what to do, how to do it to make sure cash flow is healthy in future episodes. But before we move on to the Q&A, and please, if everyone could take, you know, those few moments to actually, you know, ask their question in the Q&A box for Philip, that'd be great. I can see we already have two. But before we move on to the Q&A, Philip, could you summarize the takeaways that small business owners that are watching us live now or watching us later on YouTube can take today to improve their cash flow?
Yeah, happy to do that. I think, you know, let's put it into 3 phrases, shall we? I think the first thing is watch it. So never stop watching cash. Look at the bank balance daily. Set a daily alarm at 6:30 at night or at 5:30 at night or at lunchtime, just to remind you to go and look at the cash balance and see what it is in the bank. The second takeaway for me is managing it. Find a way that works for you, whether that's using a tool from Tide or one of the other fintech businesses, using an accounting package or using the, you know, an Excel spreadsheet, whatever it is that works for you, make sure you use it. And the third, I think, is talk about it. So, you know, talk about payment from the very beginning. Make payment a key part of the business cycle. Don't do anything unless you're sure about when you're going to be paid for what you're doing. So watch it, manage it, and talk about it.
Watch it, manage it, talk about it. Brilliant. I think that's a great phrase to remember. And I'm just going to send in the comment box the page on our website for Cash Flow Insight, which is the tool we mentioned. It helps you predict your cash flow. It shows you smart recommendation, improve your credit score, and it opens up your option for fundings if you wanted to go and have a look. It's available to our limited businesses members. So let us know if you're using it as well in the comment box. We'd love to know. Great. So I think we have a few questions already. So let's take the first one. Let's take one from Krasimir, I hope I pronounce it correctly, which is, Philip, when you look at companies' financial statements, what are the first few accounts from the chart of accounts that you look at to find an indication of cash flow problems?
That's a really good question, Krasimir. Thanks for raising it. And we'll cover that in a bit more detail when we do my who question. But I think for me, accounts are always out of date. So they're always filed, 10 months after the year end and so on. I think accounts right now are going to be of even less use because many of the accounts that we can see currently through Companies House relate to a period before COVID loans, and so the balance sheet will have changed its shape. But I think that the key things for me, looking at a set of accounts, fundamentally, are the working capital and the net worth of the business. I think if you know that the business is growing year on year as in its overall net worth, that's important. If it's got positive working capital, so if the assets are greater than the liabilities, that's good. And also looking at the structure of the assets. Are they easily turned to cash or not? If it's all in debtors, are those debtors paying or are they not? If there's lots of money tied up in stock, is that stock moving, or is it just sitting on shelves getting loads of dust on it? So I think probably working capital is the key one, but then the constituent parts of that equally are important. But Krasimir, if you want to chat about that in more detail, happily for you to reach out to me afterwards. We can have a chat through that in more detail.
Fantastic. Thank you so much, Philip. And let's take a second question from David, asking, faster payment is key to survival to small businesses. Should government be more proactive in working to stamp out late payments once and for all? Lengthy payments terms are unnecessary, but many large companies force terms onto SMEs. Could legislation be brought in to stop this once and for all?
Okay, good question, David. So government has been setting out its stall for a long time, saying that it wants to stamp out late payment. It appointed the Small Business Commissioner's Office in 2017, a role that I filled for the last 18 months, specifically to address late payment. Way back in 2008, when Peter Mandelson was the business secretary, government launched the Prompt Payment Code, which my previous organisation hosted for 12 years, and then we transferred it to the Small Business Commissioner last year. That's recently been reinforced. So the requirements to sign up to the Prompt Payment Code are now that small businesses have to be paid within 30 days, 95% of invoices from small businesses within 30 days, and all have to be paid within 60. It's not a silver bullet. There isn't a silver bullet for me on this. Legislation already exists. The late payment legislation entitles a small business or any business to charge another business interest and late payment charges if they are paying late. But very few businesses use that legislation for fear of upsetting their customers. And you make a really good point here that lengthy payment terms are unnecessary, but many large companies force terms onto SMEs. When we get onto the when question later on, I'll talk about that in a bit more detail. But it's really important that that you know what a business is going to be doing. There are lots of ways in which you can find out how a business pays its suppliers, and that's important. And small businesses, in my experience, tend to think they have no power when they're talking to a large potential customer, and therefore they have to accept the terms that are imposed. And that's not always true. Businesses can be flexible about when they pay. Many large businesses are now saying they want to support their smaller suppliers and will pay them more quickly. And if you ask the question, it's worth asking. Very often procurement teams have a sort of script they follow, but actually there are people that can alter that script so you get paid quicker. And if I may, Val, I'll share one very quick anecdote. Yeah. I had a PR guy that worked for me in my previous employer. And he and I used to talk about this stuff all the time, and he used to help me write stuff that I put out there. And he said to me he was doing a new contract with a new client, and he thought, you always preach this stuff, he said, but I never thought about it, but I thought I'd try it. And the client said, we want to pay you on 60 days. And he said, I would always have rolled over and just said, yeah, fine. And he said, I thought, I should do what Philip says, because he keeps telling me this. So he said, yeah, I'll give you 60 days, but in return, I want a 6-month termination clause in the contract rather than the standard 30 days. And the client said, yeah, fine with that. And he said, I came out of that meeting feeling like I'd won the negotiation. And so did the customer, the client. And what that says to me is that there's often something that you can get. So if a client wants longer payment terms, what's in it for you? Is it a bigger order? Is it a longer contract? Is it a longer termination period to give you time to find another client if you need to? Is it, more standardized product? Whatever it might be, there's often something you can do which a client will be very happy to do, even though they may want to have longer payment terms. You're right, they're unnecessary, and I think they should be forced back. And government is certainly pushing the business sector never to go beyond 60 days and to come down shorter than that. But I think there are tools in small businesses' hands that they can use and they should be willing to use and never be afraid to negotiate. At the point at which a customer is saying to you, we want something, you have a point of power there, so you should try and use it.
Yeah, absolutely. And I think it is brilliant how it comes back to the conversation. You know, your third point about the takeaways of today, it's talking about it. Have the conversation with your client. Make sure you find something that works for both of you. But to have that conversation, you need to be having the first 2 points, which is think about it in advance and knowing the numbers. So that's a brilliant tip. Thank you so much for the question, David. We have, I don't think this is a question, it's a comment from Lucy saying, taxi driver, would that passenger still have to pay for petrol and all fixed costs? No help. I don't know if, I think that's a comment from Lucy. I think Lucy, if you have a question though about managing cash flow within the taxi driver industry, we'd love to take that one on. We have another question from Sarah. How do you suggest dealing with clients who regularly pay late without damaging a relationship? Craig.
Okay, so for me, the whole process of managing cash flow is around communication. So it's communication with your partners, whether they're suppliers, customers, or whatever. And I think if a business is paying you late regularly, there's a guy called James Blackman in the Midlands who runs a marketing design company who has openly, he and I have been on webinars together, and he openly talks about his mental health issues that resulted from late payment and how he turned that round by just changing his approach and just saying, if you pay me late, I won't deal with you. And that was a decision he took, even though it could have damaged his business, because he couldn't afford to suffer the mental health he was suffering as a result of worrying about late payment. And in fact, he's found that that's worked really well, and his customers do now pay him on time. But I think it's around communication, and I think you have to be willing to talk to your customer or your client and have a grown-up conversation. You are damaging my business. You want me to provide good business on time, of quality. I'm struggling to do that if I've not got the cash to invest in all the things I need to invest in. And I'm struggling to do that if I'm wasting my time chasing you for payment when I could be spending it on your product or your service or your commission that you've given me. So I think it's having a conversation and having conversations with the right people. So it could well be the problem, and I've seen this so many times, the business may pay their suppliers, on time and very effectively. But if someone isn't signing the invoices off on time, then the accounts people can't pay the invoice. So it may be that the person that you're sending the invoice to is just, a bit slow in processing the paperwork, because for them, it's just a task they do when they get around to it. But they need to understand how important it is for you. So I think open and honest conversations, be ready to share the impact that they're having on your business, and be willing to offer something in return. I can do such a better job for you if you don't distract me from what you want me to do. So help me do that. And I think I'm frequently quoted saying this, but suppliers and customers should be working as partners. We want collaboration, not confrontation. And therefore, if I'm asking you to do something for me, I should treat you as a customer and I should pay you well. I should treat you as a partner and should make sure that I sustain your business by doing that. And if I'm not, I should expect you to tell me. If I'm, I don't know, if I'm writing articles for you and I'm sending them to you with loads of spelling mistakes in, you're going to come back and say, this isn't acceptable quality. In the same way, if you're not paying me on time, I should say to you, that's not acceptable. But I'm afraid that we are, I don't know whether it's a cultural trait or what it is, but we're all afraid to ask for money, and we're all afraid to mention money and to mention, things that are like this, and think that they'll just happen okay if we leave them, and the reality is they won't. And I'll share a quick story if I may. I worked for a computer manufacturer. We had we won the biggest contract we'd ever won to maintain point of sale equipment in a massive high street retailer who you would recognise if I told you the name. We won that contract, and my managing director, who was an Italian, said to me, "Don't upset them. This is the best contract we've ever had. Don't let your people ring them up and hound them for money. It will jeopardise the relationship. Keep away from them." And so he was my boss, and I did what I was told. And I said, "I think you're wrong." 3 months into the contract, we had a review with that client, and they went through and ticked lots of boxes. And they ticked boxes around the presentation of our engineers, whether they wore the right uniform, whether they were on time, all of those sorts of things. The only thing the business was failed on was not chasing for payment of invoices, because the retailer said, "If you're not chasing us for payment of your invoices, you're not a professional organisation, you're not doing the right thing." And I was called back into the managing director's office and told to get my people on the phone immediately and to start chasing them for their overdue invoices. And I think that's a sort of, it's not a small business issue, but it does indicate the importance of being professional about this. And why would you not ask someone to pay an invoice that you raised properly, professionally, and for a service that you provided well? It's absolutely right that you should. And so therefore, have conversations and be willing to confront it.
Absolutely, and bringing it back to the communication point, and communicate at the right time, right at the beginning of the relationship, so that there is a very good understanding on both parts on what's expected of both parts. Absolutely. Thank you, Philip. And thank you, Sarah, for the question. We still have a couple of minutes for a few other questions. I will give maybe a couple of seconds for you watching us live to put your last question. We've got a question from James. Great. And I'm also going to ask you to rate the session today. I'll just send the poll now, so it's on your screen, and you can answer this when you want. So we've got a question from James. How do you deal with a customer who refuses to pay a bill for home refurbishment work, which was confirmed as high quality? She's 6 months overdue. Shall I call in the night for debt collector? What are the dangers?
Okay, so if this is a business that you've done the work for, then I would say refer it to the Small Business Commissioner. That's what they exist for, and they've got a team there who will get involved and help. If it's a consumer, then I don't know who Night Fox debt collectors are, but I think it's definitely worth escalating. If someone's had work done and they're happy with it and it's right and it's good quality and they agreed to pay, then they should be paying. The dangers are that you upset them. But if you've done the work and you provided the products and the materials to do the work, you're out of pocket. And as I said earlier, I don't know what your margin is, but if you've lost £1,000, then you've got to pay quite a lot of money to work a lot to raise that money and recover it. If you didn't pay your tax, if you didn't pay your council tax, if you didn't pay your rent, you would get a final demand to do so. And I think there are lots of businesses out there who will do collection for you. They do it professionally. You don't need to get someone with a baseball bat going down the garden path. There are professional people that will do it. Many solicitors will do it and send a legal letter. The small claims court allows you to raise a money claim through the legal system, which you can do yourself. Or you can do it, I think it's called money claims online, or you can do it using a solicitor, often for a no-win, no-fee thing. But I think, if you're 6 months overdue, I would really go for it.
Great, thank you so much, Philip. James, I hope this is helpful and that you will get that payment sorted. I'm going.
James, if James wants to come back to me, I'm happy to give him some contacts that he could explore to do that.
Oh, fantastic! Thank you, Philip. So yeah, if you want to connect with Philip on LinkedIn, is that the best way, Philip, to do that?
That's fine. Or you, if it wants to drop the line to you, you can share my email address. I don't mind either way.
Okay, fantastic. Thank you. Great answer. Thank you, James. Thank you so much for your feedback. I'm also going to put in the chat box right now all the links to that's the link to the cash flow insight tool. But I'm going to put the links to stay in touch with us on the first link is our events channel. Make sure you check that, because we will be having, as we were saying, this is a series of events to help you master your cash flow. This is the episode 1. We'll have a few more to really go into details on how and when to take action and with practical tips every time. So please do make sure to join us.